The chart presented shows the technical analysis of ProShares Ultra Pro Russell 2000 ETF, ticker symbol URTY, focusing on price movements, exponential moving averages, and key technical indicators such as MACD, RSI, and Williams %R. Here's a detailed breakdown and trend summary. Candlestick chart, price movements. The current price is $48.72, reflecting a decline of 2.11% on the day. Two important exponential moving averages are plotted: the 20-day EMA at $49.96 and the 50-day EMA at $48.95. The price is slightly below both the 20-day EMA and 50-day EMA, signaling potential bearish momentum. A price trading below these key moving averages often suggests downward pressure in the near term. MACD, Moving Average Convergence Divergence. The MACD line is at 1.01, just below the signal line at 1.03, indicating a bearish crossover. The histogram shows slight negative values, suggesting that bearish momentum is starting to build, but the trend isn't overly strong at the moment. RSI, Relative Strength Index. The RSI is at 47.04, indicating neutral momentum. The RSI is below 50, implying that there is more selling pressure than buying at this point, but it hasn't reached oversold levels, which would be below 30. This suggests a wait-and-see approach, as the price could continue to drift lower but isn't drastically oversold yet. The Williams %R is at negative 90.07, indicating that the stock is in extremely oversold territory. This typically signals that the ETF is oversold and could see a short-term bounce or reversal upward. A reading this low is often a precursor to a potential rebound, especially if other indicators align. Bearish, short-term trend. The price is below both the 20-day and 50-day EMAs, which signals bearish short-term momentum. The MACD further confirms this with a bearish crossover, though the trend is not overwhelmingly strong. Oversold conditions. The Williams %R indicates the ETF is deeply oversold, suggesting that while the short-term trend is bearish, a reversal or bounce may occur soon. Neutral momentum. The RSI shows neutral momentum, hovering around the mid-40s. This implies that the market is currently balanced between buyers and sellers, but leaning slightly toward bearishness. The Russell 2000 Index, which this ETF leverages, primarily tracks small-cap stocks. Small-cap equities can often experience more volatility compared to large-cap stocks, especially during times of economic uncertainty or fluctuating market sentiment. The recent decline could be attributed to broader market concerns, such as worries about interest rates, inflation, or general market sentiment shifting away from riskier small-cap stocks. Investors might also be looking for safer assets during periods of market instability, which would push the price of small-cap ETFs like URTY lower. The oversold signals suggest that despite the current bearish trend, a reversal could be on the horizon, depending on market conditions and upcoming economic news. ProShares Ultra Pro Russell 2000 ETF is currently experiencing short-term bearish momentum, as indicated by its price below key EMAs and a bearish MACD crossover. However, the Williams %R shows that the ETF is deeply oversold, signaling the possibility of a short-term bounce or reversal. Traders should monitor market sentiment and other key indicators closely to gauge the strength of any potential recovery. This chart shows the daily technical analysis for the iShares Russell 2000 ETF, IWM, which tracks the Russell 2000 Index, focusing on small-cap stocks. It includes price movements, exponential moving averages, EMAs, and key technical indicators like MACD, RSI, and Williams %R to assess the current trend and potential future movements. First, let's look at the candlestick chart for price movements. The latest price is $216.13, reflecting a decline of 0.67% for the day. Two important exponential moving averages are shown: the 20-day EMA at $217.58 and the 50-day EMA at $215.02. The price is currently below the 20-day EMA, but slightly above the 50-day EMA. This signals short-term bearish pressure but suggests the stock is sitting at a key support level near the 50-day EMA. Moving on to the MACD, or Moving Average Convergence Divergence. The MACD line is at 2.56, slightly below the signal line at 2.67, indicating a bearish crossover. The MACD histogram is also slightly negative at negative 0.1102, suggesting a weakening momentum and building bearish sentiment. This signals that downward pressure could continue in the short term unless there is a reversal. Now let's take a look at the RSI, or Relative Strength Index. The RSI is at 48.30, indicating neutral momentum. It is below the midpoint of 50, suggesting that bearish sentiment is slightly stronger than bullish sentiment, but the index is far from oversold conditions, which would be below 30. The RSI's neutral position implies that there is no strong momentum either way, but it leans slightly toward the downside. The Williams %R is at minus 89.35, indicating that the ETF is in deep oversold territory. This suggests that while bearish pressure is present, the stock may be due for a short-term rebound or bounce. When the Williams %R is at these levels, it typically suggests that the downside might be limited in the near term, as prices could reverse soon. Short-term bearish pressure. The price is slightly below the 20-day EMA, and the MACD is signaling a bearish crossover, indicating short-term downward pressure. Oversold conditions. The Williams %R suggests that the ETF is in oversold territory, meaning a short-term bounce or reversal could occur if the price finds support. Key support level. The price is near the 50-day EMA, which could serve as a support level. If the price holds at this level, there could be a potential reversal. If it breaks below the 50-day EMA, further declines could occur. Small cap market sentiment. The Russell 2000 index tracks small cap stocks, which tend to be more volatile than large cap stocks. The recent decline in price could reflect market concerns about the broader economy, interest rates, or overall risk sentiment. Small cap stocks are often more sensitive to changes in economic outlook and monetary policy. Economic uncertainty. Investors may be pulling back from riskier small cap stocks like those in the Russell 2000 due to macroeconomic factors, such as concerns about inflation or upcoming decisions by the Federal Reserve. These factors tend to weigh more heavily on smaller companies, with higher sensitivity to interest rates and market fluctuations. Oversold signal. The oversold signal from the Williams %R suggests that even though the ETF has been under bearish pressure recently, there is a possibility of a reversal or bounce in the short term, especially if broader market sentiment improves. Conclusion: the iShares. Russell 2000 ETF IWM is experiencing short-term bearish pressure, as indicated by its price action below the 20-day EMA and a bearish MACD crossover. However, the ETF is in oversold territory according to the Williams %R, signaling the possibility of a short-term bounce or reversal. Traders should watch the price action near the 50-day EMA to see if it holds as a support level, which could lead to a recovery in price.